This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
Hello? 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 This is the Vancouver
Commercial
Real Estate Podcast.
And welcome back to the Vancouver Commercial Real Estate Podcast. I'm Cory Wright.
And I'm Melisa Moretti.
And we are back. It's 2024, Melisa, and we have Al, our good friend, Alan Haigh from Impact Commercial. Starting the year off, third or fourth consecutive year, we kick off the year every year with him. We talk about interest rates. We talk about the market. We talk about where people are looking to buy. And as Matt would always say, what would we call him?
Past guest fan
Past
favorite.
guest fan favorite. I think we've had Al on at least 4 or 5 times, if not more.
You've got to start the year with Al.
You got to start the year with Al. Yeah, if your 2024 isn't starting with Al, I don't know what better way to start.
Starting it wrong.
You're starting it wrong. You're starting it wrong. Melissa, how are your holidays?
You know what? Christmas was completely wiped out. I was so sick.
Oh,
Christmas was canceled. I have to wait until next year for Christmas.
well, I don't know. I talked to a lot of people, and a lot of people seem that they stayed local.
Yeah.
I think with the holidays, with the 22nd kind of being the last day of school for the kids, and kind of the last working day, Christmas was like right there, right after. So it didn't really have that long run up to Christmas.
Yeah.
So
And I think people are still in Christmas mode this week.
yeah, because the kids go back to school next week. We record on Fridays, so we're Friday, December January 5th, 2024.
Yep.
So the kids go back to school next Monday. So it is still quiet around most offices, but there's a lot of optimism in the air.
Yeah.
A lot of optimism in the air. I know on the commercial side, we've seen a massive increase in activity since about mid-October that kind of carried us right through December, surprisingly. And talking to a lot of our team throughout the province, they're busy already. What are you seeing on the residential side? Is there a lot of optimism out there?
I felt it in December, to be honest. I felt a real buzz around kind of, just interest, people reaching out, people starting to get prepared for a purchase.
Yep.
And we're still feeling it for sure.
So it's going to be a big year is what you're saying.
I think so. I can see the spring market coming early.
Speaking of exciting spring markets, Nickelback BC Place coming up right there. So on that note, let's get to our interview today with Alan Haigh, founding partner, Impact Commercial. And we're talking 2024 and we're talking interest rates. Enjoy, guys.
All right, let's go.
This podcast is presented by Impact Commercial.
Impact Commercial, John, Alan, the team over there are fantastic. They've all been on the show.
They have, yeah.
Friends of the show.
Great guys.
Wealth of experience. They can help with all your commercial financing needs.
Whether it's owner-occupiers, land development funds, commercial investments, or multifamily, these guys got you covered.
And they recently obtained their CMHC correspondent lender status.
So for all your commercial lending needs, visit them at impactcommercial.ca.
That's impactcommercial.ca.
And we're here today, I guess, again, first time. This is our 3rd annual show we've kicked off now. We have Alan Haigh, founding partner, Impact Commercial. Al, how you doing here? Happy 2024.
Well, thanks, Cor. Wishing all the listeners and you guys a very happy new year. I can't wait for 2024 because 2023, all sorts of challenges. So it's like, it's just nice to turn over the calendar year and get into a year where I think a lot more optimism coming, from all different parts of the market.
The only direction from 2023 is up. So we're good there. So Al, as I said there, this is, I think, our 3rd time we've had you on the show to kick off the year. We've had you on at least 4 or 5 times. And Melissa, what does Matt always say?
Past guest fan favorite.
Past guest fan favorite. Al, when you watch Saturday Night Live and they have like the 5-time guest and they give you that nice big robe to wear on Saturday Night Live? If we had that robe, we'd be giving it to you right now.
All right. I'll take that. Any time I can be in reference to, a Saturday Night Live guest, I'll take that for sure.
You're our Justin Timberlake here, just so you know.
Okay.
So Al, for those listeners who may not have heard the past episodes, can you give a little bit background of sort of who you are in Impact Commercial?
Okay, so Impact Commercial is a boutique commercial mortgage brokerage. We're also a CMHC lender correspondent, so we've kind of covered the full meal deal of all commercial finance, commercial mortgage financing across BC, and hopefully in 2024 we're going to stretch over to Alberta as well. So we arrange financing, have lots of data, lots of information of, the Vancouver Island, Lower Mainland, the interior, Northern BC, all the different asset classes, multifamily, industrial, office, retail, you name it. So we've been doing this for a good many years, and it is it's just a lot of fun, as you guys know. Never a dull moment, and it always helps to have a great trusted advisory team. So as part of Impact, that's kind of where we try to help everybody achieve their best.
You mentioned there about Alberta, and I'll only bring this up quickly, is you're probably the third or fourth person I've probably spoken to in the past probably 60 days that comes from a successful BC company now that's primarily been BC focused, but now is looking to expand to Alberta. Before we get into what you think for 2024, why Alberta now versus before?
Much lower risk, in my opinion. So where it ends up being is a lot of the times in BC, specifically the Lower Mainland, it's not to say it's priced for perfection, but it is, bigger dollar amounts, longer entitlement periods for, development process. And it just ends up being is from a dollar perspective, it's, bigger risks. Yes, it gives you the ability to have bigger returns, but in today's market, the last couple of years is that, the risks have far outweighed the potential returns. So when you look at Alberta is great population growth, over the last, number of years, lots of developable land, municipalities very much eager to support growth. Lower overall cost of housing means that, businesses and the recruitment of staff from an economic point of view are all, targeting up. With the lower cost that's over there is your cap rates are quite a bit higher. So if you are looking at stuff where you can have cap rates, 2% higher over there and the same borrowing costs, your net yield is a lot higher, cash flow is better, less risk. Yeah, you don't get quite the availability of massive capital appreciation like you do, say, in downtown Vancouver, but you don't have the massive risk. So that's sort of where it ends up being. And a lot of our clients are looking at, what can they pick up from good cash flowing assets, that are going to stand the test of time, cycle after cycle after cycle.
So if I read through the lines here, you're telling me to go trademark the Alberta Commercial Real Estate Podcast name really quickly.
Wouldn't be a bad idea. All
right, Al, 2024 is here. 2023, we talked about it. You just touched very briefly on it. It was a challenging year for a lot of people in real estate. Interest rates, start of 2023, I think some people thought we maybe kind of peaked to that 4.25% January-ish. March comes, rates go up. It goes from offense to defense for 2023. We've had 3 consecutive rate holds, I believe, September, October, December. We're coming into January here. I can say from a commercial real estate brokerage standpoint, we saw a tremendous amount of business come back into the industry probably by mid-October after that second rate hold. And I can say for November, across the board, all 7 of our offices were extremely busy, and December was extremely busy. Talking to a lot of brokers now, the various offices, as we're kind of getting ready for 2024, and everyone is saying how surprised they are, how busy they are this early in January, especially when a lot of the kids don't go back to school till next week. Al, what does 2024 look like from an interest rate perspective? And obviously that's going to drive the markets over here in BC at the prices we're at. Where are we going with the interest rates?
Okay. I love this loaded question.
Yeah, and we record it all and we hold you to it. So we're going to look back a year from now and see if you're right.
My foundation is a couple of shards of, or a couple of panes of glass in regards to interest rate forecast. Because, as everybody knows, the economists have been wrong for a couple of years on this one here. So I'm going to sort of just put it out there is that, the last couple of years, 2 to 3 years have been incredibly challenging for, anybody to really accurately forecast where interest rates are going to go. The massive fiscal spending that happened as a result of the COVID, and then the monetary policy and the drop of interest rates. that was a once in a generation, if not 2 or 3 generation, event where, so much money got put into the market, so much money was printed, artificially low interest rates, caused this, real estate boom. And so we have this sort of historical, this legacy of those, historical, events are starting to hopefully work their way through it. So the expectation for 2024, at least in my eyes, is, we've got some interesting times ahead. My personal belief, and I'm sort of setting up where I think interest rates are going to go, but it's my personal belief is that we're in a very sluggish economy right now. And there are going to be, asset classes that are going to win, and there's going to be asset classes that really just don't move. So in this next little while is like we're going to continue to see immigration come in at quite a robust, nature. It's being written about and talked about a lot that we are seeing, 500,000, new people coming to Canada, and there's going to be the effects of that stuff there. We do have some uncertainties kind of coming in because, GDP is flat, yet we are increasing our population, 500,000 plus every single year. And so the GDP per capita is kind of coming down. And, that's obviously a bit of a concern for us. So, but it looks like inflation is going to start to mute. It is coming down. That's a positive. We get these, job growth that came in at 100, new jobs in December. So where I guess I'm kind of going into it is in regards to 2024, there's a great big thing is I don't 100% know. Do have some confidence that the Bank of Canada will start to decrease their overnight rate mid this year. Maybe if the right conditions come up, maybe sooner. But it could easily push to the latter part of 2024. So nobody, unless they have an acceptable risk tolerance, should be sort of banking on interest rates dropping until some point in the back half of the year, where we just have seen some moderation of inflation and all the other stuff we talked about.
Al, you touched base real quickly there on some asset classes might be winners, some might be losers. Do you have any insight or any thoughts on maybe who those winners might be and why?
Yeah, and so it's a great thing because in preparation for this, I'm starting to think a little bit of some of the stuff and where the clients have won over the last couple of years, in the lots of conversations we have with them on what they are really looking towards. And so it's sort of a theme with, bringing up Alberta, but also this is, impact for all the primary and secondary and tertiary markets within BC is the multifamily from a rental perspective seems to be an incredibly, bullish, sentiment. There's a recent article that, when it comes to rent inflation is that if you sort of take out all the rent controlled units from the market is like, what's the average appreciation of rent growth? And it ends up being on turnover units, it's 20% a year, right? So any units that are turning over, they're going from $2,000 a month to, $2,400. So that sort of bullishness on just continued rent appreciation is really driving a lot of investment into the rental. If you put in a CMHC or lower cost CMHC insured mortgage on it, then you're doing quite well. So that's sort of like one of my main asset classes that I think people are really going to, continue to focus on. Again, simply because the risk to the downside is just very minimal. The next one there is just industrial. Again, continuing the theme, beds and sheds, where on the industrial side is like we do have, 500,000 people coming into the country, if not more, every single year. The last number of years, you're looking at, say 2 million more people is you got 2 million more consumers that are coming into it, and they need they're settling in major areas, primary and secondary markets as a specific, and this last mile delivery. And so we've got a lot of clients still rapidly scooping up industrial land, even speculating on certain areas where the zoning is going to change from residential to industrial. So that's like the two biggest ones that we see. But we're also seeing is more of just people looking at retail And mainly it's retail where there's land associated with it, in the fact that, retail historically has always been well located within, a densifying neighborhoods or on transit corridors. And so when you have those other benefits, is like picking up retail where you're sitting on an acre, 2 acres, 5 acres, 10 acres, at some point over the next 20 years, is that those things will be an infill opportunity. So, those are the top three by far that we do look at. Yeah, so those are the ones there. What we are seeing is the general is staying away from the office sector. Again, just it's too high of a risk for the return, and any office conversions that are happening, say going from office to residential, it's just really expensive. So you're just, again, really expensive, unknown amount of risk, budget. So only the best and most knowledgeable guys are going into those aspects.
Now, one thing you talked about there, obviously the multifamily sector with this massive immigration coming, and we can't get product to the market fast enough. Do you think the short-term rental restrictions that are being brought forward by the province will free up enough potentially these strata condos that will have any impact on the vacancy of the multifamily sector, or do you think that the demand is just so great that the more rooms available the better, just because the influx of people is that much greater than what we can support?
Yeah, so now we get into a little bit of the politics of this stuff here. And I guess where I think it has just been, overall, I think the management, immigration, management of the, our infrastructure, management of the economy in general has been pretty weak. And so I don't believe any government intervention is really, going to solve the problem that we have, because there's just a misalignment. And so what it means is that you are going to, we have a structural issue that rent control cannot, or supply control, like they can't, it doesn't fix the problem. What there needs to be is like a massive building of new purpose-built rental, densification. It is the only way that we can, effectively have affordable renting or rental, right? And so that's just something that's been well documented. CMHC has come out with, we're short 3 million homes or something like that over the next 10 years. I'm personally involved with, a number of different developments, for clients. And, if it takes 7 years to, once you bought a property, to entitle it, to build the rental, to get rental income coming in, like that's 7 years. Like that's not an inexpensive, endeavor to have. And so just we're structurally short of housing to actually, make a dent in all that stuff. So again, we need to have a massive housing boom in order to alleviate any of the affordable rental issues.
Now, one thing I'm always curious, so we're sitting here, we're about a week into January here. In the commercial mortgage business, when brokers get deals or buyers get deal accepted, you're kind of one of the first people they touch with the deal. Have you seen potentially an increase in activity this early on in the year, which we can kind of draw into optimism?
Absolutely. So one of the things is where it ends up being is like, and I can not only speak for my clients, but we have industry colleagues that we chat with on a regular basis. And, the market itself, it can handle high interest rates. It can handle, mid-level interest rates. It can handle low interest rates. What it can't handle is volatility, right? Because it's really tough to put equity in and manage an investment when, you're, entering in at, one price, and then 60 days later, your rate's up, 1% or 1.5%. That makes it problematic for deals to happen. What we are seeing right now over the last couple of months is more stability, right? And so interest rates over the last 60 days, they've or 90 days, they started to come off. And now we're in this period of somewhat, stability. And the longer that rates are stable, the more optimism returns to the market, because more decisions can be made with certainty. And so we're just seeing with that greater certainty from, less volatility in the interest rates, that more people are going, all right, I'm going to go in and negotiate a price, and I'm willing to put my equity in because I can, pretty much assure myself that the interest costs on any debt is going to be, I'm not going to get surprised with that. So we have seen a lot more people start looking at, purchasing deals. Like we do a lot of, we actually will financially model a potential purchase for our clients. We potentially we model out for at the sales agents of, all right, here's where the mortgage amount is going to be. Here's how much equity is going to require to do this transaction. So we're usually brought in right at the beginning, before they even ink is dry on the purchase contract. So we're seeing a lot more of those analysis being done, discussions had, properties getting under contract. We don't necessarily, we are seeing stuff here. We're not necessarily going to be expecting things to really pick up, and probably until the end of January, because people are still on holidays right now. Kids aren't back in school until next Monday. So it is, so far is, much more certainty, much more confidence for the clients putting properties in contract.
Now, with that said, is there areas within the province that you're starting to see more levels of interest from buyers or contracts coming in? Is there a hot spot? Is there a hot spot?
Different areas?
Yeah. Is there a hot spot in the province where are you seeing lots of deals and buyers interested in, say, Kelowna or Victoria or Vancouver? Is there like a hot spot that you're starting to see an overwhelming amount of interest in?
It's a great question. Honestly, it's kind of, it's like everywhere seems hot. There's a lot of bullishness for a lot of areas. Vancouver Island is probably one of the strongest. The interior continues to be, quite strong. Lower Mainland, very strong. There's a lot of capital that's sitting out there waiting to be deployed, and a lot of that, those clients they're looking at all these different options. Probably the thing, from 20 years ago, from 10 years ago, is that the confidence in these secondary markets like Vancouver Island and the interior is completely changed. Like it used to be, those markets were boom bust kind of cycles. So you never want to go too deep into those markets. But now we find a lot of comfort with all those markets, mainly Vancouver Island, Lower Mainland, the interior. But, you get up to the Kootenays, you get up to certain, other areas, especially northern BC when it comes to, the multifamily rental. Like there's a lot of people are comfortable with it. So, all those areas are doing well. It's just more of the asset class that I think is the thing that's driving, whether it's hot or not, right? So it is, pretty much everywhere for multifamily and industrial is quite hot. Pretty much everywhere, office is not really hot. So it is more asset specific than geographic specific.
Now, maybe just shifting provinces here real quick. You did mention Alberta sort of at the top of the show, and there's been lots of guests that have said anything. Is there any areas like in Alberta specifically that you guys are seeing a bunch of interest? As an example, we've had some past guests. We talked about some industrial areas. And one area that I know that they've sort of keyed in has been Balzac as an industrial area there. It sits right outside the ring roads. There's a little bit of a tax benefit from a property tax standpoint. Amazon and some of these big companies have all acquired land in that area. Is there any specific areas in Alberta potentially that you guys are keying in on? You've seen an increased amount of interest?
You know what is that always where it kind of comes into it is I know I don't want to be speaking on a subject that I'm not 100% knowledgeable on, and the specific areas of Alberta is it's not going to be necessarily my forte. In fact, we're not currently licensed in Alberta, so we try. We have to sort of ride that line. Our goal is to get licensed, in 2024, but it's more of the asset class that we are seeing a lot of, right? And so it is, the multifamily rental and the industrial, pretty much in the two major areas. So that's Edmonton and Calgary and the outskirts. Those are the ones that our clients are looking at the most, without question. But I will just sort of say, hey, I know what I know, and I know what I don't know. So it is just like, in regards to specific areas of Calgary and Edmonton, I'll take a pass on that. There's better people that we can have on the podcast to share insights on the smaller municipalities, specific areas in Calgary, Edmonton, and potentially others that your listeners can get access to.
So I've read various reports from different economists and bankers and all this stuff, and I kind of get. I'm just going to throw a range out here where some of the people seem like they think interest rates potentially might peel off 75 basis points by the end of this year. I've read other ones that are more aggressive in the 125, 150 basis points in 2024. Do you have a general sense, or what are you hearing there that might be a number tossed around that we might be able to, it's not bank on, but comfortably feel that rates are going to come off 50 basis points, 75 basis points? Is there a number out there floating around that a lot of people are talking about?
Well, you know what? There's a wide discrepancy in that. Some people are calling for cuts in April. Others aren't calling for cuts until the end of the year. I've seen stuff where it's going to be 75 basis points during this year, and then more aggressive cuts in 2025. The reality of it, where it kind of comes into it, is it sucks to say this, but so many people have been so wrong with their forecasting the last 2 to 3 years that realistically, I might as well lick my thumb, put it up in the air, and see what on a daily basis where the wind is coming from. Sort of my gut tuition is when you kind of being burned a couple of times with some of these things here, it's like I'm a little bit more on the conservative side. I think that during this year the Bank of Canada is going to be slow to make these changes, and probably I would be leaning towards by the end of this year a 75 basis point in cuts. It'll all be data dependent, and then if we see increased weakness, then they might go a little bit more aggressive. But I think that the Bank of Canada is going to be very slow and very measured in regards to the interest rates cuts until they get a lot more confidence in regards to, inflation, specifically the wage inflation that we continue to see happen. Like wage growth accelerated to 5.7%, which was, people were surprised with in December. So there's some stuff that needs to be worked out. But I guess, 75 basis points by the end of this year is kind of where I'm thinking about. And that's the Bank of Canada. For all the listeners out there, where it kind of comes into it, it's like the Bank of Canada sets their overnight rate, which, leads, to the prime rate. So those people that are on variable rate mortgages linked to prime, they're going to see some savings on that. Anybody that is looking at, term investing, so if you're going to get a 3, 4, 5 year, fixed rate term, those are, the source of funds for those is the bond market. And so we've already seen the bond market correct quite a bit. The 5-year Government of Canada bond, was up to about 4.4%, many months ago. It's now down to 3.3%. So the bigger bond market has already sort of come off about 1.1% over the last 3 months, which is a measurable change. And so those rates, the bond yield is moving in advance the Bank of Canada. And that always happens. The bond market it'll start increasing before the Bank of Canada moves rates upwards, and then it decreases before the Bank of Canada decreases rates. So the bond market is forecasting or showing that there is going to be lower rates coming forward into the future. For those that are going to be purchasing investment properties, which is just simply cash flow, is like it's already started to move and you're already much better. What we now need to do is just see some of those lender spreads, which is just, you've got your bond yield and then the lender puts in, a spread above it, and that's called a risk premium. So what we want to see is some of those risk premiums drop down. And I think that's going to happen probably mid-year, where, hopefully we're going to start to see the 5-year fixed rate mortgages that we get through the lenders, down below 5%. So I'd love to see that crack 5% by mid-year, and I'll be a happy guy. And I think that the real estate market, at least commercially, will start to accelerate once that 5-year, all-in mortgage rate gets below 5%.
Well, so you said there's some people are calling for rates to drop springtime. Some people are calling for rates to drop end of the year. We just want to go on record here at the Vancouver Commercial Real Estate Podcast. We're calling for rates to drop February, and we're looking for 200 basis points. So that's what we're calling for. We're going to call for that. Not in case Justin Trudeau is listening or Tim Macklin's listening or someone's there. We're calling for 200 basis points next month. We'll see what happens.
We need Tiff and his deputies to help us out on that stuff there.
So Al, obviously this year feels more optimistic. There's a lot of things happening out there. People feel like, different asset classes might come back. One thing we didn't really touch about too much on, I want to get your thoughts, because it seems to be the hardest to finance, development land. And I can say from a brokerage standpoint, we've seen a dramatic increase in interest, contracts, things going under contract, even some deals going firm on land deals, which I was surprised to see kind of happen so fast. Are you guys seeing that on your end on the banking side, where there's more of these contracts coming your way or potentially coming your way on the land side of things?
It's an interesting discrepancy. I would say that the first time is our clients are still very slow on the on purchasing land right now. We do have, did complete a couple on the industrial, side of things and the multifamily over the last 2 to 3 months. But it's an interesting environment. And the reason why from a financing perspective is most commercial lenders is, they have a certain amount or percentage of their portfolio that they can put into, say land financing, or what we call in our thing there is like an interest only type financing. So rule of thumb is about 15% of every lender's portfolio can be in an interest-only, non-amortizing kind of product. And the problem with the stuff that we've found recently, or the last couple of years, is that land loans are supposed to, within a measured period of time, say 18 months, 2 years, they're supposed to go from a land loan to a construction facility, and then a construction facility to either a term out if it's a rental, or if it's a market condo, it gets sold and you're off. We've seen just everything kind of glum up, right? Like it's just like construction has been slow, and so these, the availability for the liquidity available for land loans has been, very, very tight from all these lenders, because the process of going from land financing to construction financing to term out is not happening. It just gets stuck in the land and the construction. Our hope is that, and what we have seen, a strong increase of, is we've seen a lot more of our clients start the development permit process and continuing, going down that process. So we've seen renewed confidence from our clients to working with the municipalities to entitle the property, which is obviously, extremely positive. So we've seen existing land holders who have sort of been waiting, a period of 12 to 24 months. They're now starting to action, their stuff. So we're expecting within 2024 that, we're going to have the entitlement process for a number of these things done, and then they're going to go into the permitting process or the full building permit process, later on this year, and probably pull the trigger on doing the construction, in the spring of 2025. So with that stuff, there is what we're going to see is some, the opening up of capacity to do more of the land loans. And so that's sort of where we're seeing. We still have lots of financing available for land loans, but if you're doing a land loan at prime plus 2%, prime plus 3%, just to kind of do the math, and with prime at 7.2, you add, 3% on that, you're at 10.2%. So, it's you still got to do your analysis for land loans, because they're not cheap. So you better get the land at a decent price. And so I guess what you're probably seeing is some of these purchases are coming on where the sellers of the property are, either needing to sell. So more deals are happening, which is good. We need that floor to be established for land pricing so we can start moving up.
Well, Al, you know how the rules work here, and we appreciate you taking the time to always join us here. But before we let you go, we've got our 6-pack of lighthearted questions we got to ask you. And every time you come on so often, we got to tweak it every time. So do you have just a few more minutes here for our first 6-pack of 2024?
I do. I was hoping to possibly get away from doing this stuff, because
no.
I didn't do any reading this Christmas because it was all with the family. So I'm hoping that there's no book questions.
Oh, that was number one, but I guess we'll change that one. The 6-pack is powered by our good friends over at Red Point Law.
Red Point Law, Cory, Tim, Falco, Scott, and the team. These are great people with a wealth of experience when it comes to commercial closings and private lending. And I just want to say, Cory, not to cut you off, they have a perfect 5-star review on Google.
So for all your commercial legal needs, visit them at redpointlaw.ca, with offices in Vancouver and now open in downtown Kelowna. What is your New Year's resolution for 2024?
New Year's resolution?
New Year's resolution is to, realistically, is lose a few pounds. 2023, kind of got away from it, got to get back onto the ice rink. The Peloton. The Peloton.
I've been hitting the Peloton somewhat regularly now, which is great. So Peloton and the ice sheet with the boys up at Hollyburn to lose a couple pounds.
Well, we always make fun of me falling off of the Peloton on this show from time to time, but I'll just give the listeners a little bit of back context. Al got a Peloton before I did, and Al was telling me how great it was. I think Alan threatened me where he's like, if you don't get one, I'm going to buy you one. So I actually went out and bought a Peloton, and I've the best investment I've ever made was my $1,400 or $1,500 in my Peloton. Not that my results show. My pants are getting bigger every year. And my favorite part of January is I have a set of dress clothes in my closet that I call my fat pants, which I roll out every December. And the best part of January is my fat pants are now just my pants. So I need to work hard on the Peloton to make them my fat pants again. Otherwise, they're just my pants for January. So, but Al, you're the one that got the Peloton. You threatened me there, so I had to go get one, and all of a sudden now I'm getting fatter every year. But I guess I could be fatter if I wasn't Pelotoning. There you go. All right, Melisa.
It just kind of means you just got to spend that time. Take a half hour off of work in the morning and get that Peloton done.
No, you got that right. Next question, Al.
All right, next question. Are the Canucks going to win the Cup?
We know you're a Canuck fan. We know you're a hockey fan. Are the Canucks going to win the Stanley Cup this year?
Yeah, I'm going to say no.
Oh.
Hey, I love our guys, but we only have a few that are where I think that they're going to be able to drive it in the playoffs. The playoffs is it's a heavier game than regular season, and everybody is talented. So whether or not we got a heavy enough team for the playoffs is something I hope we do. I hope we make a couple of trades to get a little. What was that last D Zadanoff? I can't remember his name, but love adding 6'5" guy, 220, 230 that can keep the players, the opposing players away from Demko.
So I guess here's question 2B then. Who's going to win the Stanley Cup?
Oh, you know what is tough question. You know what is the where it is? I kind of have it's more of a hope. I would really like to see McDavid and Draisaitl, get in there and have a good cup run at least, and hopefully win, because not sure if Edmonton's going to be able to keep those two around in the future when their contracts come up.
Melissa's shaking her head. She has no idea who McDavid and Draisaitl is. So they play for the Edmonton Oilers, which is south of Balzac.
Right.
There you go. Okay. Now we've drawn our conclusion. All right, Alan, next question up. A vacation destination for 2024?
Roatan, which is a small little Caribbean island just north of Honduras.
Ooh. Oh, I didn't expect that. My destination this year is Abbotsford, so that's really good.
Hey, man, you got to switch it up from like Mexico, Hawaii, and stuff like that. No, but I think my wife and I, we kind of got it. I went down to Aruba for my mom's birthday a year and a bit ago. So I think we want to get back to that side there, and the less commercialization, the better. So it'll be interesting trying to swing that one there right now.
All right. Next question. We know you didn't read a lot of books over the holidays, but do you have a TV or movie recommendation?
A TV or movie recommendation? Jesus. Trying to remember. It's a little. There's been a couple things on Netflix that I sort of binge watched with my wife. I'm not a big sort of TV watcher. So I think, what was it? There was this one goofy show called Lucifer that was kind of fun to binge watch with the missus, over the holidays.
I'll have to check it out.
All right, Al, and last question. A piece of advice you would give a commercial real estate investor heading into 2024?
Keep your powder dry.
Keep your powder dry. And for all the listeners that don't know what powder is, Al, can you explain what powder is when it talks about commercial real estate? Because Melissa looks lost here.
Your cash.
Cash.
Right? So
keep your cash dry.
Is make sure you respect your equity that you have, because in general commercial real estate investing can be highly lucrative, but you have to have a long-term outlook. It's not something that, it's not like a stock where you can purchase it one day and sell it the next day. It has a minimum holding period, in my eyes of, 3 to 5 years, with the preference to have it as longer. So it's like when you put your equity into it, is you got to be 100% confident and sure that you're comfortable with that investment. So it is. We always, especially for our clients, is we make sure that all the analysis is done. You got the best and brightest from your real estate agent, your insurance agent, your lawyer. Done all your due diligence, you know what you're coming into, you make the decision to purchase it, but make sure that you do all that stuff. So when you do deploy your cash, which is incredibly important again, is make sure it's the right decision and do that stuff. So don't just throw it willy-nilly at any kind of deal that comes up. Is have some diligence and trust around you to do all that stuff.
So Al, for all of our listeners here that want to find out more about yourself and what you guys are doing over Impact Commercial, how can our listeners get a hold of you?
Easiest way, as always, is you can connect with us through our website, impactcommercial.ca. Give me a buzz on my cell phone. Reach out to all the different social media stuff. We have an excellent gal here named Pawnese who runs all of our Instagram, LinkedIn, Facebook, stuff like that. So we are highly available, highly accessible. Love talking about deals. Love helping people. So it's don't hesitate to give us a call, email, social medias, and we'd love to help you.
Well, Al, thank you once again for taking time to join us. We appreciate it. If we don't have you on before, we will book you in for the first week of January 2025.
See you next year.
Nice. Appreciate it, guys. Have yourself a great, prosperous new year to everybody. And 2024 is looking, it's off to a great start.
Great. Thanks for your time once again, Al. We really appreciate it.
You bet, guys.
Take care. Bye-bye. And there you have it, folks. Our interview with Alan Haigh, Managing Partner, Impact Commercial. Always great having Al on to kick the show off. Always great takeaways.
That's right.
Always great takeaways.
2024 is off to a good start.
2024 is off to a good start. Interest rates, I think there's an overwhelming consensus that we're coming down. Some people like 75 basis points. Some people aggressive 150 basis points. We went on record and we called for 200 basis point drop in February, which that's our stance. That's what we want to see. I don't know if it's going to happen, but we're going to be hopeful.
That's right.
We're going to be hopeful.
Optimism.
Optimism.
That's the word for 2024.
Optimism. We are heading also into a political year. So there'll be a lot of pressure probably from the Liberals to get to the BOC to get those rates down, because you definitely don't want your opposition campaigning on how unaffordable the country is because your late reaction to inflation. We're not saying they were late. We're just saying what people think they were late.
That's right.
Because I do not want to get audited, so I'm not going to be saying anything negative about the Liberal Party. But always great having Al on. Great takeaways. It feels like there's a lot in the air for 2024. We're excited to be back. It's going to be a big year for real estate in this province. Last time I checked, and I could be wrong in saying this, they haven't made any more land in this province. So I think we're going to be okay coming into it. Be a big year in real estate. We've got a lot of great guests lined up. I'm excited about some of these great guests we have. We have some guests we've been trying to get on the show for a while that over the holidays I had to beg and plead and finally convince them to join us. So we've got a glutton of great guests coming up here over the next couple of months. So I'm
around
excited.
in your Santa suit.
In my Santa suit. Are you saying that because I'm fat?
No, not at all. You're just a Christmas character.
A Christmas character all year round?
All year round.
All year round.
That's
so
right.
this
gingerbread.
This pear-shaped body converts into Christmas Santa.
But you
for
make
12
the
months.
magic happen. You got all these great guests for 2024. I'm impressed.
Yeah. Well, when I reach out to them, they always say, "Will Melisa be co-hosting?" That's the answer I get back every
That's
time.
right.
And if I'm like, "Yes, she will," they're like, "Sign me up."
That's right.
So it's a team effort.
That's right. Corey, how can people get a hold of you?
People can reach out to us at our Vancouver office anytime, 604-428-5255. Let us know what you're looking for. We'll put you in touch with the best broker in the province. You can send me an email, Cory@williamwright.ca. Always love hearing about great guests and show ideas and talking real estate in general. Or you can visit our website, williamwright.ca. Sign up for the latest and greatest news. And Melisa, for all those who want to get into bidding wars come springtime on their houses, how can they get a hold of you?
All right, 778-869-4477, or you can email me at melissa@vancouverrealestatepodcast.com.
All right, everyone. Thanks so much for listening. We'll be back next week with another tremendous guest. And Happy New Year. And let's get ready. It's going to be a great 2024.
2024, let's go.
Thanks for listening.
Subscribe today.